What is up, guys? Mikkel here, and today we're getting into STEM Inc. This is one of my favorite plays in the clean energy sector. So if you enjoy this video, make sure you like it down below, comment what you think, and subscribe to the channel because I'll be covering this company more in the future. So let's jump right into it, and let me say right now, STEM is a global leader in AI-driven energy storage. I think this is a super interesting company because I believe they will be a critical infrastructure company in the new clean energy system that will be run in the U.S. This new administration is really pushing forward clean energy initiatives, and it's really being pushed all over the world. I think STEM is going to be a critical play in the U.S. going forward. One thing I want to point out is a lot of retail investors are really focusing on more speculative companies in the clean energy space, such as electric vehicle companies. While I do think there are electrical vehicle companies out there, when I show you guys a comparison of STEM and some of the EV stocks out there, I think it's going to be obvious how much of a better investment STEM really is, and how picking stocks like this that are less hyped and less undervalued but actually have greater growth and greater potential than a lot of the companies other people are looking for can really make you money over the long run. So let me just jump into this, and first let me just give, before we really talk about what the company does, I just want to show you some of their partners because I think this is great technology validation and shows how trusted they really are in the industry. They work with UPS, Adobe, Facebook, Gap, AMC, Albertsons. These are big, Whole Foods. These are big partners, and it really validates that they have something pretty good going on, because companies like Facebook, and Adobe, these are tech companies. They're just not going to throw money at some random artificial intelligence software. They saw something potentially good with STEM, and I think that's a key reason why I think it's worth a look for our investment. Also, this is just a quick description or a quick pictorial of what they do. So they want to connect solar power grids, the current energy grid, battery systems, and all kinds of other utility usages, all through their Athena smart AI platform. So let me just show you this video real quick, because I think, and we're not going to watch the whole thing, but I want them to describe what they are rather than me, because they will do a much better job.
The electrical grid is being transformed. As more renewable and distributed energy resources like wind and solar are connected, a significant amount of battery storage will be needed to stabilize the grid. STEM delivers and operates smart battery storage solutions for commercial customers, independent power producers, and utilities. Our market-leading Athena software uses advanced artificial intelligence and machine learning to optimize the operation of these batteries by automatically switching between battery power, on-site generation, and grid power. It's the first AI software for energy storage and operates the world's largest network of distributed energy storage systems. Athena absorbs massive volumes of real-time data to provide continuous monitoring, forecasting, optimization, and automated controls to deliver its many value-added services. Here's how it works for commercial customers. Businesses install energy storage to maximize energy savings, reduce greenhouse gas emissions, and increase resiliency during outages. With Athena, customers can see how much the battery is saving them, what the battery is doing to achieve these savings, how it is optimizing the value of solar, and detailed views to understand Athena's activity in real time. To maximize bill savings, Athena's machine learning predicts energy demand, considering weather and temperature data among other dynamic data inputs. For customers with on-site solar generation, Athena predicts how much power will be generated and the optimal times to recharge the battery from solar. Athena then automatically evaluates each customer's exposure to dynamic energy and demand prices and adapts to store and release energy when the customer will achieve the most savings. Throughout the day, the AI is evaluating thousands of scenarios on how to use the battery to achieve the optimal result, and is doing this simultaneously across hundreds of customer sites. Because of the substantial savings and sustainability benefits, Athena is used by a growing share of the Fortune 500 and hundreds of commercial and industrial customers.
So I'm going to stop it there, but I think that was a pretty great clip. It really shows the what Athena is and the value they can bring to companies. I think as companies push for better ESG, I think STEM is going to be a very simple thing for them to leverage to really increase their overall ESG and make them a more climate-friendly company. I mean, we're in times where the SEC says the most important thing for them is making more climate-friendly companies. Like, that's not even what the SEC is supposed to be doing, and they're saying that's their biggest mandate. I think this is a trend that's not stopping anytime soon, and I love where STEM is positioned because, as you can see, it's really something everyone can benefit from. It's not tailored to one specific industry or one specific kind of business. They're saying no matter what you do, we can plug in our product and make your business more efficient, which is something I really enjoy. So if you guys want to know more about the company, I think you should go to their investor relations, read about it, look more at that. But I want to get into the stock real quick because this is an investing channel. And although my background is in engineering, this is where the money's made, because if this stock was valued at $50 billion, like some of the EV companies, I wouldn't be touching it with a 10-foot pole, but the story is different, and that's why I like this. So, as you can see, as soon as STEM was announced, they really rocketed up, dropped all the way back down, and I actually added my first shares around 20 bucks. Continued to drop down and then came back up on this run. It fell down again, and I added some more shares around 22 bucks. Now, for me, it's a no man's land. I want to see if this comes down or breaks up. We'll have to see. I think it's really going to depend on how they execute this quarter, but so far they have been doing great, which is something I like to see. STEM was a recent SPAC, and a lot of SPACs, like I point out in my Astra video, have not been delivering on their promises. STEM has, and I love to see that. STEM is currently $3.3 billion in market cap, which is expensive for, we'll get into this, is only 1 month revenue, but it is expensive for their revenue, but let me just show you right now. Yeah, they should be looking at their 6-month end in June was $634 million. I think they're projecting, somewhere in the case of 64 million, and end of year 104 million. So that would drastically bring down the price of sales for this company and make it a much more attractive valuation. Additionally, they're growing 341% year over year. So this is a high growth company, which is something I love to see. When you're comparing this as an investment, I look at a lot of hype around companies like Lucid, which have a $28 billion market cap, only 10 times STEM, and only have 174,000 in revenue. This is a company that's drastically being overhyped for the clean energy market, when really it's more niche because they're doing high-end cars, have massive competition, and aren't really as critical as something like STEM. No company is going to start leveraging Lucid cars for their business to make it more clean, but they will be doing that with STEM. Yeah, so this video is not about Lucid. I just want to show you, this is what a lot of the YouTubers are talking about and different retail investors, but what I'm telling you is STEM is a better investment in my opinion. I really do like what STEM is doing, and that's why when I play this EV space, I want to play it through something like STEM and not something like Lucid. I did want to make another point about STEM. Hopefully it comes back to me. But we'll jump into this right here, which is essentially their financials. As we can see, they are their revenue is increasing very nicely, which I like to see. One thing I don't love is their cost of revenue, which is also increasing almost perfectly in line with their revenue. I do want to point out a lot of what they're doing is putting in the hardware systems that do cost a lot of money, but their Athena software is going to be built on top of it, and that's where the software margins will come in, and hopefully we'll see this top number right here really start deviating from this bottom number, and I think that would be really good to see. I think that would really, because with software you get higher margins, it's reoccurring, and overall it will be a more profitable business. So honestly, I really do like the model of using their hardware to get in the door and set it up for a company. And then once they have it set up, and as long as the software functions well, they won't want to leave that ecosystem. So I do like that a lot, actually. And while I would like to see this cost of revenue lower, it's really them building out the business because this is early stage. One thing I did also want to point out is another company that you might be thinking is similar is Tesla and their Tesla's battery business. Actually, I can't remember if it's in this investor presentation, but they actually work directly with Tesla, and they actually use Tesla's batteries essentially for their storage system, and also build their software on top of Tesla. And in terms of storage capacity, they're actually outbeating Tesla. So I think this is, once again, great technology validation, and also kind of showing, even though they're in a similar market with Tesla, it's not going to be winner takes all, and it seems like they have already carved out their own space in the industry. Here is some direct sales, and it looks like they're selling to Walmart and Amazon. They really do have some, they really are selling to some massive businesses. And yeah, here we go. And this is just saying that these are some of the people that they work with, and Tesla's actually a supplier to them. So really, it's an ecosystem that's working together, and they're not necessarily in competition with these other battery companies. They're looking to build their software on top of them. There's one more thing I wanted to get into, and let me see if I can find this. Sorry, guys. Okay, yeah, here we go. So right now they're really, okay. Right now, their hardware gross margins are a lot lower, but they want to put their recurring software Athena system on top of it. And I think this is where this really starts turning into an awesome investment, because this is where the software margins roll in, and we see STEM trading at a way higher multiple than they're showing right now, where they're really working with hardware. This is what I think really separates them from something like a Lucid Motors or other EV companies, because not only does this company seem like an infrastructure play in a new emerging sector, but they are really going to have a sticky business that's going to keep them around. Anyway, guys, this is really a STEM introduction. We want to see how this company plays out over the next couple quarters. We want to see their revenue continue to expand, and we want them to deliver on some of their predictions. They predicted $15 million in this last quarter. They did $19 million. We want to see them keep beating on these expectations. And if that is the case, this stock will be poised for a good run and good future. A lot of the thing with investing in these SPACs is you need to be careful for the scams. So far, they have continued to deliver on what they said they would, have over-exceeded it, and reaffirm that by the end of the year, they will be doing $119 million in revenue year on the year, which would be great and really validate everything we're seeing with this company. We've got to see how it plays out. Right now, I really like it. I will continue to build my position on any dips. If we flatline for a while and we still base, I might add some more. But if we go up, I'm going to hold my position and leave it from there. Anyway, guys, I hope you like this video. Stick around for more. Make sure you subscribe to this channel and let me know down below what you thought of it. Anyway, for now, Mikkel out.